So in today's video, I'm gonna be explaining to you why authorized user trade lines are becoming obsolete and why they're gonna be less effective going forward. So for those who don't know what an authorized user trade line is, it's basically a credit card account where someone gets added to that particular account and their credit profile inherits the account history. So it'll manipulate different components of your credit score, including your overall utilization, your on-time payment percentage, your average age of accounts, and so forth. And so when those are able to increase, it'll bring your credit score up. Now, AUs have been around for a very long time, and I would say over the past couple of years, they've increased in popularity. Now, part of the appeal of AU trade lines is this idea of a shortcut, right? A lot of people want to be able to get access to funding quicker versus building your credit organically, because in order to build your credit through primary accounts, it will take several years before you get to a certain point where you can start to get approved for certain types of limits and things like that. Whereas with an authorized user, you're just kind of piggybacking off of someone else's credit data. Now, in the past, authorized users were much more effective, but going forward, they're not going to be that effective. And I'm going to explain exactly why. Now, first off, an authorized user account is actually not your account. So it doesn't truly convey what your credit worthiness, because you weren't actually managing that account over that period of time. Now, the AU hack where, you're able to appear more credit worthy than you are with an inflated profile is not going to be the same going forward, because lenders are starting to adjust to this, right? At the end of the day, the lenders are the ones who created these trade lines. But the problem is when people appear more credit worthy than they actually are, that puts the lenders at more risk. So the lenders are starting to adjust now to incorporate other data points. Now, another thing I wanted to point out in terms of credit score, right? So a credit score, a high credit score that's a result of AU trade lines and not primary accounts, is not the same as someone who has that exact same credit score, let's say a 750, but they have years of history as a primary account holder. They have a mix of different credit cards, loans, and things like that. That particular profile is going to hold more weight than, someone who has zero primary accounts and maybe 4 or 5 AU accounts. It's just not the same comparison, and it's not going to hold the same weight when it comes to lending decisions. And one thing about credit scores as well, it's not always the higher the credit score, the more credit worthy. You could have someone with a 780 credit score from AUs, but then you might also have someone with a 680, but they have all of their own accounts. That person with a 680 may be able to get approved for higher limits and more accounts than that person who hasn't demonstrated that they could handle debt loads as a primary account holder. So that's one thing I wanted to address, that I think a lot of people get caught up into just looking at the numeric credit score, and oftentimes not even the correct credit score, because most people are looking at their credit karma, which isn't even used in a lot of lending decisions, right? You have to look at the FICO score, and then within FICO, there's a bunch of different scoring models. But besides numeric credit score, there's other data points. As I said, managing accounts as a primary account holder, where you've shown that you've been able to handle a particular account where you were responsible for that particular account. Primary accounts hold more weight than authorized user accounts. An authorized user account is kind of like taking steroids. The minute that account isn't on your credit profile, you lose a bunch of points. No different with steroids, right? Once someone stops taking steroids, they lose all their strength. So it's just an inflated credit score, and it gives people a false sense of their actual credit worthiness. And when lenders look at your credit profile, if they're doing a manual review and all they see is that you have a lot of authorized users, they may interpret that as you trying to deceive them into thinking that you're more credit worthy than you actually are. So the best way is really to organically build up your credit profile. So besides credit score and credit profile, there's other data points. Now, I've talked about this in a lot of different videos, the Plaid API. So Plaid API allows financial institutions and lenders to get data on your banking activity, right? And banking activity is something that you're not going to be able to manipulate as easily as you would with a credit score, because you could add authorized users. With banking data, they can look back to see the history of that, how much money you have going in and out of your bank account on a month-to-month basis. So the Plaid API is now integrated with almost every major financial institution. Now, when I was talking about this months ago, a lot of people were skeptical, saying, is it a scam, that they don't think it's secure or anything like that. But Plaid is one of the leading fintech service providers that allows financial institutions this other data point. And besides banking activity, as you guys have seen with a lot of these fintech apps that are looking into your banking activity to qualify you and underwrite you, Plaid is now getting into income verification, where they can plug directly into your employer's payroll system, right? So if you use ADP, you can plug into that. They could see, when's the last time you got paid, what was your net income for the month, and they could just pull up your income history at your job. So that's just additional data points. Now, another data point that people don't look into that's very important is tax returns, especially if you're trying to get business lines of credit, right? Commercial bank issued business lines of credit. Go to any bank, they're going to require 2 years of business tax returns. So if you really want to play the long game, you're going to have to position yourself with these other data points besides just focusing on authorized user trade lines, right? You're going to want to have tax returns to show profits. Now, here's one thing about the tax returns that a lot of people don't understand is that, because I know a lot of people want a refund from their taxes, right? But if you're writing off everything and you're showing a small amount of profits, when you go to the lender, let's say you had 100,000 in revenue, but you only your net profit was only 20,000, right? The lender's going to go on the 20,000, not the 100,000 that you actually produced in revenue. They're going to go by your net profit. So if you're showing as little income or net income on your taxes, then that's going to affect your ability to get commercial business lines of credit. And there's implications to that because remember, 2 years of business tax returns. So you kind of have to think long term when it comes to these other data points, right? Focusing on your primary accounts, focusing on your banking activity, focusing on your tax returns or any income that you might have coming in. Just focus on having other data points. And again, I'm not knocking anyone who uses authorized user trade lines. All I'm saying is that if you're relying exclusively on AUs and you don't have these other data points as well, then it's going to be a lot harder because the days of stated income are going away with Plaid, right? Because just in the same way that Plaid can verify your bank balances, they'll also be able to verify your income. So the point I'm trying to make is that there's other data points that are considered in the lending decision besides just your numeric credit score. And I want to be able to share this information so that you guys are up to date, right? I know there's a lot of people out there promoting authorized users, telling you about authorized users, but if you're getting into it now, you're kind of late to the party because lenders are adjusting. That technique worked effectively in years past, but going forward, it's not going to be as effective because again, AUs are not really your data, right? It's not really your account. So it's not your true credit worthiness, and lenders want a complete picture. So AUs give a distorted, inflated sense of credit worthiness. So when they don't have an accurate picture of your credit worthiness, that poses risk to the financial institution because if they're giving someone who really should have a 500 credit score, but on paper they have a 750 and they're giving this individual all this money when in actuality they can't really repay it, then that puts a lot of risk on the bank side, and the banks want to reduce risk. So by introducing these additional data points, the banks have a clearer picture. So if you're focusing on AUs, all I would say is that don't lean on it to hold up your credit profile. Build up your own primary accounts as well and focus on some of these other data points. That's all I wanted to share in today's video. Let me know your comments and questions right down below. Until next time, take it easy and we'll talk to you soon. Peace.